All right, we are back, everybody. We had a slight technical difficulty. Luckily, we caught the recording early, 10 seconds ago, so we are back. So this is episode 13 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics: fake trading volume. Looks like 90%, 95% of the trading volume out there on the spot Bitcoin market is fake. Not really a big surprise. We'll talk about that. Bitmex put out a great paper on the Lightning Network and the routing fee economics. Really good read. And then, an interesting topic is the unicorn bubble that our good friend Jesse Colombo was talking about. Lyft trying to get their IPO out early. And if that's not a sign, I don't know what is. But yeah, man, how you doing this week?
I'm doing good, and as you said, Jesse Colombo, I love his stuff. He just a phenomenal job. If you don't know who he is, look him up on Twitter. And he works, I can't think of the company he works for or whatever.
He's great. He's
phenomenal.
He's got some Austrian school libertarian point of view with a lot of this stuff, and is really pushing the malinvestment angle, and I love it because it's correct, and he really does a good job of breaking it down, and people definitely don't like what he has to say, which I can understand why, because it's correct.
He talks about it all the time, and it as we've said before in previous episodes, I mean, you just have to look at Snapchat's IPO, Blue Apron, Spotify. Now there's other ones that perform well, but either way, or even either way, it doesn't really matter, because you look at these things, and all it is insiders and VCs basically dumping their shares on top of retail money that's been hyped up via financial media. We see it every time. Like CNBC goes nuts around these things. Like Spotify's IPO, that was a big deal. They were hyping that one up last year. We've seen it with Snapchat. Snapchat was ridiculous. Everyone was talking about Snapchat. Every college kid wanted to buy fucking Snapchat shares. They didn't know why. It was just because there was hype built around it, And we've seen Snapchat do zero. It hasn't innovated at all. And honestly, it's a worthless app now, in my opinion, for the most part.
Yeah, I mean, let's keep talking about this, because it's a good topic. I just don't. Snapchat's a good example because it's a useful app. There's millions of users. People do love it, but monetizing that is very difficult. And when you're a publicly traded company and you're burning through cash like crazy, eventually people want to make back everything that they have invested. I mean, the people who got in early, I'm sure, did fine. They dumped their bags on everybody else, and now everybody else can kind of deal with it. But trying to monetize is not easy, and it's very helpful when someone else is willing to pay for those expenses for a couple of years before you can even turn a profit.
Yeah, it's interesting when we see with Lyft. It's like Lyft made something like $2 billion revenue last year, but it lost over $900 million. Was its total profit loss. So that's a big deal. And why is that a big deal? Because they're making money, they're scaling, whatever. But it's like at the end of the day, they're just a taxi company. That is all. Anyone can copy what they do. You see with Uber, you see with Didi Chuxing in China, and so the Didi Chuxing is a ride hailing app. So same thing as Uber. Lyft. There's nothing unique about it in that sense. It doesn't have a monopoly in this market. And then when you look at the fact that they're burning cash at an incredible rate. There's some stupid number about how much they spend on advertising, like $800 million. There's some ridiculous number. Did you hear about that? It might have been either 800 or 80, but it was some absurd number. And I think I would see that being possible because of how many ads I've seen.
Yeah, I mean, that's I did a breakdown of their operating costs, and advertising and promotions is 25.7% of every dollar that they spend is going towards advertising and promo. So when you think about how much they're spending on advertising plus the fees that they take per ride, which is 27% or higher, I mean, that's just massive. These Lyft drivers definitely are not making too much more than minimum wage when you start to factor in depreciation and all of the costs of running the vehicle. It's not that great of a business, but it's nice because anybody can go and do it. It's great that there's a free market for that, but they're just not scaling the way that they should be, as compared to Uber, I suppose. And you just wonder how much longer this can go on. It's not a surprise that they IPO'd, right? Somebody else needs to fund this unprofitable business for a few more years until they can hopefully start breaking even, which is possible. I don't know anymore. They're starting to seem more unlikely.
Lyft said they might never achieve profitability, which makes zero sense. And I think Uber said that too, and I just don't get that. So, what's the end game for the company if it's just losing money at all times? Who's getting the dividend? Because anyone who's making money on that right now has made money because they're holding shares of a company. It's just a growth company basically. They're just holding shares, and then they're just trying to dump it onto the greater fool. It's the greater fool theory here, and that's exactly what's going on. And that's why they're pushing this so hard.
Yeah, I'm curious to see which one of the two of them, or possibly a new entrant, ends up surviving and sticking around for the longer term. I would assume it would be one of the two, probably not both, because I think that's a very specific problem that you can solve, right? Matchmaking for rides getting from point A to point B. It's a great business model for sure. It just needs to be as profitable as possible. And if you still need to take 27% of the fees to cover your costs for the ride, and the drivers only get 73%, I mean, it's just a software play that I'm sure is very difficult to pull off, but I'm sure someone else can come in and offer that at a lower fee and outcompete Lyft in this case. And I think that's what Uber's doing. It seems like they're scaling a little bit better, so I guess it wouldn't surprise me if they survive. And because they do a good job. I like using Uber. I don't know enough about their operating expenses to say otherwise, but I've only really looked at this article from Jesse Colombo on the unicorn bubble and Lyft's operating costs, and it's really sketchy. The other one that I wanted to talk about here was their credit card fees. 11.46% of every dollar for their expenses is going towards credit card fees. That's just a huge number, and a lot of that, I want to say the actual processing for the merchant is probably closer to 3%, and then the rest of it ends up being chargebacks and other stuff where Lyft has to eat the costs. And not a lot of people think about the chargebacks, which is only possible in a pull system. Like fiat is a pull system, whereas Bitcoin's a push system. So you won't see chargeback fees in a Bitcoin system, which typically ballpark out getting close to that 8 to 10% range of costs because of all those chargebacks. Like the seller has to eat those. They have to eat it. Amazon has to eat it every time. They get chargebacks like crazy, and their margins are already super thin. So that's just a big set of white space to attack. If you can trim off 10% just like that on payment processing by using a different financial infrastructure, it's going to take a long time, obviously, but that's there's a lot of savings to be had for Bitcoin businesses to operate in the future when it becomes more of like a usable currency, I suppose.
Yeah, I mean, we were discussing before, when we're going through the notes, they make $1 billion in revenue, and so 11.46, that's $110 million, more than $110 million right there, just gone.
Yeah, that's huge when you put it that way. That's a lot.
And you think about how much does that cover? That covers salaries of corporate employees, and you think about anything else, and they're just bleeding cash. So it's like things like that.
Yeah, it looks like their insurance expenses are 21%, which is really high too. I'm sure that will change over time and decrease as insurance companies get more comfortable with ride sharing services, but it just goes to show you there's a lot of Um, by everyone using the same thing as money, you'll end up saving a shitload on efficiency of just that. And all of these payment processors will they won't be able to rent seek that much. Like those fees are astronomical, and they really add up when you put it in terms of billions of dollars in revenue, and then 11% of that. The numbers are really large, so it will be very oh, and this brings up a good point. Someone just sent me a DM of them in a dispensary in Ohio, and the dispensary took Bitcoin and offered a 10% discount. So think about that for a second. You are a business who can sell a product or service and offer a 10% discount because you don't have any payment processing fees because you're running your own point of sale system right at the store, and you're not going to have any chargebacks because it's a push system, right? That there is no fraud. Only one person can send you that money. No fraudulent transactions are possible. And you can offer that 10% discount because you're having that much of a savings by being your own payment processor. And everybody wins. The consumer spends less, right? So they've created wealth for themselves because they're saving on something that they were going to buy anyway. And now they can take that 10% that they're saving and go and spend it on something else to help with the economy, right? That's an everybody wins situation. And a lot of people don't think about it that way. And I think it's important to realize that everybody wins in a world where Bitcoin is money.
Yeah, it's definitely interesting. You think about the incentive for that dispensary or any business, is they're taking in Bitcoin at 10% less. So if they're, whatever their product, let's say something's charging $10 for something, that's they're saving you $1, and if you think about $100 product, that's $10. And that company is basically betting on the future with Bitcoin. I guess it depends on what they're going to do with that money, because unless they're going to hold that Bitcoin or if they're going to convert it to pay for bills, because you got to think about operational costs, obviously, of that business. But, if the company's banking on Bitcoin 10xing over the next 5-year period, it might be more wise for them in a long-term standpoint.
Yeah, I think that's a really interesting point, and a lot of businesses who are thinking about accepting Bitcoin should do just that and keep it and don't touch it, and do your best to cover expenses with your customers who are still using fiat, because that Bitcoin could be used to accelerate your business in the future when it's much more valuable, and it can pay for things and allow you to expand and make your business better. And I think Square is going to just crush it with that. I think they're going to make it very easy for merchants and sellers to start saving in Bitcoin in a weird way by accepting it or having it converted like right at the point of sale and putting a percentage of that into Bitcoin and just sitting on it. I think that's an interesting product or service to offer.
And I guess I didn't think about not everyone's going to pay for something in Bitcoin. So realistically, most businesses could easily hold most of that Bitcoin. Whether for down the line use payment or just as basically as an investment. Think about Overstock.com, because they were accepting Bitcoin.
They've been sitting on that for 5 years or maybe a little bit less, but I think they started accepting payments for Bitcoin in 2013. I mean, so you're already doing well if that's the case. I think that would be very wise, even if you assume 1% of your transactions or less is being paid in Bitcoin, and you can afford to not convert that to fiat right away to cover your expenses. That will probably be the easiest way you've ever earned Bitcoin, and will pay massive dividends a decade from now when you need to expand your business or do something else.
Yeah, no, that's again, long term, the companies that play the long game with internet obviously won out. There are certain companies, obviously there was the internet bubble, the tech bubble, but then the companies that did actually utilize the internet, and even the ones that came after the tech bubble that utilized the internet very well, like Google didn't IPO to 2003, but still they played the long game with it. And, like, I might not like Google, but they did play the long game very well. Now they are basically a giant monopoly.
Yeah, Fidelity played the long game really well too, because they've been mining since 2013.
Gosh, that's
and
crazy.
sitting on that, right? So Fidelity's been thinking very far ahead. They've been mining since 2013. Now they are working on their custodial product. Fidelity could be a powerhouse in the future.
There's no doubt about that. I mean, that's a very interesting.
I mean, I guess it already is.
I didn't know they've been mining since 2013. That's a big deal.
See, that's my point. How much BTC could they possibly be sitting on? They could be sitting on enough to spin up a whole new venture.
I mean,
you know what I mean?
They could easily be sitting on 1,000 Bitcoin. That's like a low ball. That's like a low ball estimate when you think about it. If you've been mining since 2013, like a bank mining, they probably have a warehouse fucking mining. It's not just, you know what I mean?
Just the fact that they've been doing it and have been taking the lead for finance, I think is really good. Another piece of news that I just saw, I believe someone from Coinbase just recently moved over to Fidelity to work in their
yeah, I did see that.
Custodial. I'm pretty sure I saw that.
I can't remember who it was. I did see something with Coinbase.
I want to say it was the someone from Coinbase who is in charge of like institutional sales, I think.
Mm-hmm.
Yeah, Fidelity poaches Coinbase institutional sales head. So I mean, there you go. Coinbase is definitely not getting as much traction from institutional investors as that makes sense. If you're like a family office or an institution, you're not going to go to Coinbase to custody your assets. You're going to go to Fidelity. I mean, I hate to even put it that way. I mean, I don't like every decision that Coinbase has made recently, but I wouldn't want to custody my assets with them at all. I would much prefer to go with Fidelity.
Yeah, no, I mean, Fidelity's a professional institution. They've been around for a while. They've proven their worth. And you look at, something like Coinbase, it's only been around for 5-6 years, something like that. Maybe a little longer, 2012, 2013?
Yeah, 2013-ish.
Yeah, so
or earlier.
6 years, basically, and their track record's okay, but really, before 2017's blow up, they weren't much. That's what made them big, and I think, they're another unicorn. Now, granted, they obviously, I believe in their ability because they're, unicorn based on the Bitcoin market. So there's a long road ahead for them. There's a lot for them to grow into when you think about it, versus other companies like Lyft. Lyft is just a taxi. At the end of the day, it's all it is. So it's going to be interesting. And do you know if Lyft does surcharge like Uber? I've never used Lyft before personally. I think I've ridden in a Lyft, but not.
I'm almost positive that they do. I don't use Lyft very often, and I do know people who only use Lyft. So it's not that people don't like to use it, and it's not that their service isn't great, but I think it's going to be really tough for both of them to kind of thrive. But I guess it's possible. They really got to work out a lot of stuff with it, though. It still can be a little sketchy.
Well, think about the aspect, how could a company like Lyft or Uber even do, I know people talk about autonomous cars, but, you got to think, a lot of the people who do Uber are just hammered out of their minds. When you think about, just getting drunk and getting in Ubers, how the hell are you going to do an autonomous Uber with drunk people?
I don't know. I've never.
I've been thinking about
that. Yeah,
you couldn't be doing autonomous Uber with people who are blacked out. Seriously. Think about there's a good amount of people that use Uber who are hammered. They don't have to be blacked out, but you know what I mean.
I guess that's a good point.
Yeah.
I would say I'm trying to think. That's a good point. So now that we're on the topic, let's assume autonomous vehicles are the norm, and the majority of the fleet is autonomous. Would a human driver still be required for certain types of rides? And I think that answer is yes in certain circumstances. So that's interesting. So it's bad for drivers, right? Drivers will unfortunately lose their jobs to autonomous vehicles, which is okay. because the overall cost of the rides will decrease, and the wealth created from all of the people who get to use Uber and Lyft at a cheaper price far outweighs the jobs that are lost for being Uber drivers. And those people will find new jobs and work just as hard as they were working right now, because they're already working hard as Uber drivers. I see it all the time. So I have no doubt that they will continue to thrive. But yeah, that's a good point, man. Maybe they're going to need human drivers for nights and weekends, or even like trips to the airport. Like
exactly.
Sometimes you have a family going to the airport, or you have a couple of suitcases. You want somebody to help you with your bag. Maybe that's a little short-sighted because I can't think of what a autonomous vehicle would look like that could pick up my bag for me and put it in the car. But that'll probably that will exist one day. If they can do it with the trash trucks, I'm sure they can do it with luggage at some point in our life.
Here's your answer, dude. You won't have autonomous cars. You'll just have robots driving your cars. This is like iRobot. That's where we're heading. Like, seriously, when you see these like robots from Boston Dynamics doing stuff, have you seen any of those videos? Like, it's a little sketchy. You're like, oh shit. But I know we're getting a little off topic here, but it is, I guess, part of this whole thing is like the long game for these companies is autonomous vehicles, if that is possible. But like, I have, like when you think about Uber and Lyft, as much as you want to make roads completely just autonomous, I think you have to either split them up and just have like roads for human drivers, roads for autonomous vehicles, because humans are unpredictable. Versus a network of cars, synced together, knowing who's going, who's at the stop sign, etc. What if some dude just loses their shit and just blows a stoplight? You know what I mean? Like, there's so much things that I know it's an autonomous car, but still.
I don't know. I don't have the answers to that question. I think it's fascinating. I really can't wait to see how human drivers and autonomous vehicles interact more as there's more of them on the road. If I make the assumption that an autonomous vehicle is a better driver than a human driver, because I actually think that would be true. Most people are not good drivers, and most people also assume that they're a better driver than they are. I probably think I'm a better driver than I am, and that's okay. Everybody thinks that. That's fine. I'm cool. I'm cool with that.
Yeah, me too.
If autonomous cars are arguably better drivers, is it more dangerous or less dangerous to be on the road with more good drivers and bad drivers? So I think overall road safety would increase, but you're still definitely going to have issues. I mean, it's going to be interesting. I don't know. I can't wait to see more of them. And I really want to see the Tesla semi trucks like start taking things longer distances. I think that's a really big market, just like autonomous trucking will eventually be pretty big if that ends up coming to fruition and working, because that solves a lot of problems. You can then start to run these trucks they already run 24 hours a day, I'm sure, but it could make certain businesses and logistics a lot more efficient, and then bring that cost down for everyone, which is what you want. That's what the end consumer should want. You want to squeeze those margins on everybody. And only the companies who can keep their operating costs as low as humanly possible will survive. And those will be the same people that also have the best product. So the free market really takes care of a lot of this stuff on its own. I don't know if that's... people get pissed at that. Oh, well, everybody should be able to compete. Well, it's like, yeah, everybody should. And that's why it's a free market. And you want the lowest cost good and service to be available to everyone as quickly as possible. So we'll see that play out in our lifetime. It'll be really sick to watch.
Yeah, it's that's autonomous vehicles are a whole nother thing, because it's you think about areas that are sparsely populated versus where in a big city like L.A., New York, makes sense there. But when you're in Appalachia, Kentucky, in the middle of nowhere, or you're in somewhere in Wyoming, and where there's 1,000 a town, your town is a population of 1,000. It's a whole nother story, because is there always Uber drivers, always Lyft drivers? Will this person be able to drive me 10 miles to the next town, or should what I mean? So it's a very interesting thing. I guess it's just city versus the country, or city versus the small town.
Definitely, definitely. But we'll see that. We'll see that. You want to take us into some of that fake trading volume since we were talking about Lyft IPOing. I think that's a good segue into the Bitwise presentation.
Yes, it is. The Bitwise presentation was phenomenal, and I'm waiting for it to load if you're watching on YouTube. Bitwise Asset Management, they are trying, in the current process of trying to launch an ETF for Bitcoin. As you probably heard us say last time, I don't know if an ETF for Bitcoin really will look in 10 years, if it'll be a thing that would be like, oh wow, that was, dumb, or it made sense, because at the end of the day, honestly, if you're thinking about doing a Bitcoin ETF, at the end of the day, you should just buy Bitcoin. Just buy it. Good to understand it because it is here to stay for now. And so when you go into this, this basically goes over. It surprisingly left out Bitmex, which is what people were saying. The elephant in the room is Bitmex is a giant trading but exchange for those that don't know, and it is known for its liquidity, its very good liquidity, good entry, etc. But it also does have its issues. But it's known to be one of the best, and we've seen before, like a lot of people who are like fund managers, etc. in in crypto use Bitmex, and it's just because the liquidity is good and you're getting the prices you want for big orders, and you see that. I don't know if fund manager was the correct thing, but I don't know if institution is the correct term, but people who are buying for basically funds. So when we go into this, it talks about what makes an exchange noticeable. What's the key indicators of exchange that's using fake volume and one that's not. And as I expected, like the ones that were the correct exchanges, like the exchanges that weren't lying, were like the household names. The Coinbase, Kraken, Bitstamp, and a couple others. Obviously, Binance. People hate it, people love it. I think Binance did a great job because they launched in August 2017 and just went, skyrocketed. I mean, they became the number one exchange within like 6 months. It was nuts. And it's because they just listed so many shitcoins, but their platform was actually pretty good too. So it wasn't just that. And this is exchange breakdown. So here's a picture of Coinbase Pro, which was formerly known as GDAX, and you can see like over here, one of the key things, what's a real exchange looks like. There's never going to be the same amount of buy and sell orders. That's not normal. That's not normal psychology. That's not how the market works. So that's a key indicator. Next thing is the order size. How are they varying? Are there a bunch of smaller orders? And then are they round, numbers like round numbers? Like the average person's going to go in and buy. They're not going to go buy 0.55533 Bitcoin. They're going to go buy 0.5 Bitcoin. They're going to go buy 1.5 Bitcoin or 1 Bitcoin. Going on with that, looking at the volume here, this shows the volume. It's sporadic. When there's times of capitulation candles, that there's higher volume, etc. What you would see normally, and then during the peak hours, so like at the U.S. Open, then you'll maybe see the European Open, and then like at the Asian hour, like later at night. So say if you're in America on Eastern Standard Time, that'd be like 8 p.m. your time is when like there's the Asian Open going on, or somewhere around there. And then, so this is asking, just showing what a real exchange has is a good bid-ask spread, and the bid-ask spread is simple. People are bidding to buy, and people are asking to sell, and that's a simple. When there's a tight spread, that shows there's liquidity. That shows people are actually trading. When we go to a suspicious exchange like Coinbeanie, which I've heard of before, but never used it, never looked at its website before or anything. They said they had 480 million in trading volume, which is 18 times Coinbase Pro. And you look at the volume here, and it's just very mounted. It's not sporadic. And right here is a very obvious thing. For every buy order, there's a sell order. That's a clear indicator that fake volume. And what they're doing is either wash trading, pretty much wash trading, because they're just setting it. They'll set an order to buy for 1.5, and then they'll set an order to sell for 1.5. Another suspicious thing is the timestamp. Combine the trades, the column, you'll see that the trades in Coinbean come in pairs, and each pair has one buy, green is the color if you're watching this, and then one offsetting sell, red. The size of these trades are always roughly equal size, as shown in the middle column. The line that is merely offset by one another. Going on forward, for starters, there are no small trades. This is a very noticeable thing. The smallest trade is 0.43 Bitcoin, which is quite large when you think about trading. Like, that's still a pretty large block. That's almost $2,000 now, or $1,400, I guess, when this was written. And then Coinbase Pro, because Bitcoin's at 4,000 now. And then Coinbase Pro, you have trades as small as $5. Also, no round number trades, despite the obvious behavioral reasons for their existence. So in Coinbase, you'll see the 0.6, the 0.5, the 1.5, the 5 Bitcoin order. You don't see that here. You see just 4-digit Satoshi things like 1.1011, 2.5901. Another noticeable thing is the bid-ask spread here. When you look here at Coinbase, to buy Bitcoin was $32.39.59, while the best offer to sell was $32.74. The spread was $34, which is $34.74, which would be at that time with the price of Bitcoin, that would be over 1% spread, which is quite large. And then the footprint is, number of Twitter followers, 10K for Coinbase, 1 million for Coinbase. Number of Google results is 1.25 million versus 26 million, that's almost 25 times. That's nuts. Web traffic by SimilarWeb, 90,000 versus 1,900, and it should be pretty obvious Coinbase is 1,900 versus Coinbase 90,000. Venture funding raised, unreported by Coinbase, 546 million over 7 years by Coinbase. And Coinbase is now a unicorn for those that don't know. Number of employees on LinkedIn, 42. Most appear to be part-time for Coinbase, 852. Coinbase is quite large now, as they are one of the I guess if you're a crypto noob or if you just don't understand the buy and sell, it's the easiest way to do it, though they have high fees, and that's why if you do decide to buy Bitcoin, I would not use Coinbase, and I would use Coinbase Pro because the fees are a lot less. That's how they get people. They get people to buy like Bitcoin. They'll have people buy Bitcoin, and there's a huge fee when you use like the Coinbase app or just regular Coinbase, and you're like market buying it. But it's like market buying with just a huge fee on it. Anything you'd like to add, CH?
I would like to add that if you are just trying to stack some sats, to use Cash App over Coinbase. You won't find any shit coins on the Cash App. The fees are much better, and that is the type of user experience that you want to have with Bitcoin. It's really slick. It's clean. It feels like you're using the Square terminals. I mean, it's very clean, and the buying process is just very simple. And people should get used to using something like the Cash App to buy their Bitcoin and use it, and see how seamless that integration feels. Like when the phone's in your hand on the app, that should be exactly what the experience feels like.
Yeah, I haven't used Square to buy Bitcoin, but I have opened it up on my phone, and it's very neat. It's very simple, just a clean user interface. And as he said, the fees are less, and Square is a pro Bitcoin company. They're, as CH said, they're not a huge shitcoin company because they don't sell you shitcoins. Though I do think they do. Do they list anything besides Bitcoin, like any pricing? Or is that, I'm thinking of Robinhood.
Robinhood, yeah, no. On the Cash App, your only option is to buy Bitcoin.
I didn't have to view like charts or anything. I mean, here's another example of a suspicious exchange. Like, you just look at the chart here and the volume. There's just giant gaps. It's just no volume, and that's like day periods there. That's like a long time. So that's a pretty obvious. If you're ever on an exchange, you don't know if it's sketchy or not. That's a pretty obvious right there. Yet they say they have 4 times the volume of Coinbase. And then each red candle. Looking at this, multiple hours. Yeah, exactly. No volume here. That's ridiculous. Like, clearly something's going on. And then right here, right BTC, this is what I was talking about earlier, the $371 spread. like that's insane. That would be a 10% spread. With Bitcoin at 3,200, that'd be over 10%.
Right, so I think this is a good time to say that if you're using any of these shitcoin exchanges that are not in the top 10, be very careful. Don't leave your Bitcoin on those exchanges. and consider looking for a more reputable exchange, because yeah, it's really bad, and it's all fake volume that's being accumulated on CoinMarketCap, and data on CoinMarketCap is being used to write like research reports to shill shitcoins, talking about that they have, billions of dollars worth of volume, and that's not the case. There's like a dozen people who are interested in it and trading it, so be very careful.
Yeah, as you said, a great example is like Cryptopia, the shit token exchange, the hidden gem exchange, as people would call it, on crypto Twitter. Got hacked a few months ago. It wasn't too long ago. And so it's one of those things where like you got to be very careful with exchanges used, in terms of if you're going to leave money on it, make it a very, very nominal amount to you that doesn't matter. Otherwise than that, I would never leave money on it.
Yeah, I mean, BitThumb was just hacked like over the weekend, and like $13 million worth of ETH was stolen. Yeah, I mean, it's a joke. Like, people DM me all the time and ask, which exchanges are safe to leave your Bitcoin on them, and the answer is none of them. Even the most reputable exchange with FDIC insurance, like, that's the whole point of the asset, is that you can hold it yourself. You don't need to custody it with any third party. And people will understand that. Somebody's going to know somebody who had their Bitcoin taken because they didn't self-custody, and everyone will learn eventually. It might just take time. Like, there's nothing you can do but try to encourage people to not leave their shit on the exchange.
Yeah, I agree with that. Leaving stuff on exchange is dangerous. It exposes you to a bunch of different things. Government seizure, hacking. You could go on a whole list of things that could happen. With that Canada exchange that had the founder die and the private keys are just gone.
Right, that's a perfect example of a very low probability event where the CEO of the exchange is the only person who has access to the keys and then passes away. Yeah, I mean, if that doesn't sound like an exit scam, I don't know what does, but you also have to remember that people get exit scammed with a lot of these hacks that are most of the time end up being inside jobs. So they're throwing a lot of trust with some of these shitcoin exchanges. And I guess I give Binance some credit here. I'm not sure if they've ever been hacked, but for being a shitcoin exchange, I give them credit for doing a pretty good job for everybody, actually. No, but that's not a good endorsement for leaving your coins on Binance. But yeah.
No, I think CZ's done a great job. I think with what he's done. You don't have to like Binance, but you do have to appreciate what they've done for the space, and they have a good exchange. They have a really good exchange, like good support, and it's just good user experience overall. And you always see CZ just, he doesn't, like, for how much he's worth, dude, the dude just wears a fucking hoodie. Like, yeah, come on, the dude went from like nothing to like 2 billion in about 6 months. Like, yeah, that's insane.
No, yeah, it's true. As much as I'm not too thrilled with Binance's listing of shitcoins, if the market demands such a product to exist, CZ is doing a good job at delivering that. I also think Bitmex is a really interesting exchange, just because they kind of operate outside of the financial system, right? Like, you can't, no USD deposits, no fiat. Yeah. It's Bitcoin only. I think that's you're going to see more of that. Definitely, these Bitcoin only businesses that operate completely outside of the legacy financial system, and that's a great thing. It's fantastic. I can't wait to see more businesses doing that. Which will then ultimately, hopefully, lead to the acceptance of the guy who DM'd me from Ohio. He was like, yeah, I'm going to try to pay my taxes in Bitcoin too, which I don't know that I would, just because I wouldn't want to give up any of my Bitcoin. But there's going to be a time when you only operate in Bitcoin, right? Then when you're not going back to fiat because you don't have to anymore. And when that time comes to be, I don't know if a company like Bitmex will require having a bank account because all of their employees will be paid in Bitcoin at that point, and they will be paying all of their expenses in Bitcoin at that point, because eventually everyone's going to want to hold a better money. And Bitmex is a service that demands it. You can only use Bitmex if you're willing to use Bitcoin. That's the deal. I think that's awesome.
Yeah, this is. I mean, like, I opened up Binance. If you're watching YouTube, you can see it. This is just when you open up Binance.com. This is what you see. You can go to Exchange. You can go to Advanced. And it's a pretty nice setup, to be honest. Like, it's a very, and I know CH can see my screen. Just a very clean interface. It's dark. Very simple interface. You have over here. You have the recent orders that have gone through with the timestamps. So see what I mean? Look at the buyers here for Bitcoin. This is Bitcoin, I think USDT, which is Tether. Look at that. So look how many more buyers are. Oh, there's a huge patch of sell orders, and then here's the orders that are waiting. Here are the bids and asks that have not been filled, and so you can like group them out. I've grouped these out pretty far, I guess, 2 decimals. But it's pretty interesting to see that, and this is how, I guess, if you're watching on YouTube, this is how crypto exchanges are pretty nice. I think when you go from a crypto exchange back to like a traditional finance thing, you're surprised at how far they're behind. With the better exchanges, when you see something like this, whether you're just a regular investor or anything, when you think about like how much this would benefit anyone, just to understand how markets work and whatnot, and bid-ask spread, and the whole thing behind the market and how it works.
Yeah, they do a good job. I'm glad, because we're going to see real exchanges start to come out in the future. I think we're going to see a lot of really great platforms for everybody to use, some operating within the current financial system and others not. I bet you Bitmex gets some competition eventually.
There is Deribit. Sorry, I didn't mean to cut you off there, but Deribit's one of them.
Okay, yeah. That'll be a cool time. I'm interested to see that. It was also interesting in that the Bitwise report was the daily turnover for Bitcoin is pretty close to that of gold. So gold's market cap is 7 trillion or approximately, with a spot volume of 37 billion, which implies a 0.53% daily turnover. And Bitcoin was just behind that at 0.39% daily turnover. It's an interesting comparison, showing, I guess, the similarities of both assets being used as a store of value. Because when you start thinking about the actual real daily spot volume of Bitcoin per the Bitwise report is approximately 270 million, which is not even close to the billions in daily volume that's shown on coin market cap, which makes a lot more sense. Bitcoin's not turning over that quickly of a percentage on a daily basis. People are holding those UTXOs for a long time, as we discussed in a previous episode on the the HODL waves and the UTXO patterns over time, and so we know now that people hold for a long fucking time. So that makes sense that the daily turnover is really low. I'm sure that will increase over time as more liquidity gets into the market, and you start seeing this thing in the trillions of market cap. But I guess the percentage could stay the same. It did for gold, but I guess nobody really uses gold for anything else other than to store their wealth and speculate on. So we'll see if that changes, but it could stay pretty similar.
I was going to say, this has been pulled up on the screen for a little bit, is the reported volume by CoinMarketCap, which was 6 billion between March 4th and 8th, 2019, and the actual volume, 273 million, source Kaiko, March 4th through the 8th of 2019. That's crazy. That's and that makes sense though, because you think about really that many people that are into crypto. There's the people, the shitcoin holders, they aren't really trading. There are traders out there, but for the most part, there really isn't that many people trading. If they're either a shitcoin holder, bag holder, they're just holding it and hoping for the long term, or they get lucky, or in the same case with Bitcoin, they're holding it because they see whether a future with it, or they just believe long term. So the reality is there really isn't that much crypto turning over, but exchanges are selling a shit ton of fake volume, and CoinMarketCap doesn't do its due diligence. It's that simple.
Yeah, CoinMarketCap is trash. So if anybody is arguing with you about metrics on CoinMarketCap, you can just dismiss them, ignore them. You're wasting your time. CoinMarketCap is just complete trash. The volumes are a joke. So if you think that your favorite shitcoin is having billions of dollars worth of trading volume, you're mistaken. It's not real.
It's interesting to think about where I was gonna say, like, really what was crypto's peak, because it's CoinMarketCap's 833 billion, but was that the right number? Was it higher? Was it lower?
No, it's a good point. It got there on its own. But here's something that I heard Bitcoin Tina mention on Twitter, and I wanted to hear what you thought about it. And he said, I'm not going to quote him exactly, but like, if this is great news, because if Bitcoin's real daily spot volume is only 270 million, imagine what the price would be if the volume were actually higher and real money starts coming into the space. And you have this asset that is scarce as fuck with a really low turnover that people will sit on. What do you think starts to happen to the market of BTC that's willing to be traded?
That's a good question. That's a very good question. That's
I mean, I think it does a lot for the price, right?
Yeah,
I mean,
you definitely.
There's not a lot of
price.
There's not a lot of supply, right? I mean, the supply's very low. Somebody, I'll put it to you this way: someone can't come and say, "I want to buy 21 million of them," right? It would be impossible because people are sitting on them. There's not that much liquidity out there. There's not that much BTC for sale. So as more money starts to come in and that spot volume increases, that's when those hodl waves start playing out and people start letting those coins go back on the exchange.
I just realized that I was viewing my the other PDF I had pulled up, so my screen's been stuck on Binance the whole time. So sorry, YouTube viewers, I apologize. It's you can see my screen right now, right? The trade histograms. These are pretty interesting. I know we're a little off that now, but still, like when you look at the well-known patterns for like known exchanges, Coinbase, where the volume is. And this is talking about the size. So this is the size of the being traded. So you can tell, like, starting from like 0.0 whatever 1 to 0.1, and then as you go up, there's less. But then when you look at suspicious ones like Coinbeanie, like IDAX just cuts off, and then LBank, the highest ones are at 10. OKEX doesn't make any sense. X rates doesn't have anything smaller than, I can't see it, but it's probably, if I zoom in, I can tell. Yeah, so it starts at 3 Bitcoin. This cuts off. Bit4X cuts off at 6. Like, it's, it's pretty interesting to see that. And they're just showing here why they're suspicious. But it'd be interesting to see if they show the time here. Oh, here's some more suspicious exchanges. Like, it's just blatantly obvious. Like, Cymex. And then you look at the volume spike alignment. So this is talking about, like, when you see volume spike, when Bitcoin pumps or dumps, there's volume. There's more volume in trading. That's how markets work. Bittrex, Kraken, Bitflyer, Poloniex, all, spike at the same time. Now some may spike more or less, like Bittrex less here, Poloniex more here, and then when you get Coinbeanie, just none of these just look right. That's not a normal market. Spread patterning, look at the spread pattern here. And it just, what the hell's going on here? You're getting crazy spikes. So none of that's normal. And it's clear as day that, like, you just have a bunch of exchanges that have zero volume for the most part, are faking their numbers, and as CH and I were talking about earlier, the reason they're faking these numbers is listing fees. And you ask, what is a listing fee? Well, there's a shit ton of shitcoins out there. I don't know how many there are now, but last I checked on Coinbase, it was easily over 1,500. It's probably 2,000 now. Who knows? If you can get these coins because a lot of these do still have money because their coins are worth something, or they've had treasuries, or they cashed out. if you can get them to pay $1 million each per se, you get 10 shitcoins to list at $1 million. You just made $10 million, straight up. And then when you think about exchanges that accept like 25, 30, 40 different coins, that's how they make their money. When they have no volume trading out, they're not making money there. So it's because they're gonna make money through more volume because of the fees. When you're trading on exchanges, they'll have certain fees per trade, etc. Withdrawal, deposit fees, you name it. Would you like to add on, sir?
No, that was really good.
Yeah, I thought you were gonna add on. I thought you were about to say something. Sitting there waiting.
I was thinking about it and then I didn't.
Yeah, it's one of these whole exchange things, but it does make sense.
The listing fees are huge. There's an incentive to fake volume, right? I mean, it's not a conspiracy theory. It's fucking just it's business, right? You can make $1 million per listing, and all you need to do is make sure that it looks like the coin is pumping and has some volume and activity, and people are actually interested in doing scooters on the blockchain or whatever the fuck the token's supposed to do, and that's the end of the story, right? I find it very frustrating when people are telling me that these shit coins are going to be worth something, and they're not even aware that all of the volume on them is not real. So it's just frustrating.
Well, here's a great example of this quote. The market price to list a crypto token on an exchange is $1 million for a reasonably regarded token to $3 million for an opportunity to get quick liquidity, and that's autonomous next April 3rd, 2018. And so you think about a lot of that volume probably last year, well, not even probably, was faked by exchanges to just get these insane listing fees, because coins were, especially ICOs, of course, were just trying to get liquidity as soon as possible. And, whoever's the lowest bid. So, one exchange might say only 500,000, but still they're raking in 500,000 per listing. You list 100 coins, that's $50 million.
Yeah, a lot of money to be made.
And you think these exchanges, obviously there's obviously expenses they have, but an exchange that might only have 5 employees really isn't that many expenses. There's not like there's benefits program or anything. These are just some programmers, maybe some support. Maybe not, depending on how sketchy this changes.
Mt. Gox was,
or they contract out the support. You know what I mean? Like there's a bunch of different things.
Right. You really don't know who's behind the exchanges, and I think everybody kind of learned that lesson with Mt. Gox, realizing it was Mark Karpellis and not too many others who could actually do anything with regarding Mt. Gox and customer support and stuff. So he was like doing customer support tickets and working on the back end of the exchange. It's a mess.
He's carrying a lot of weight. That's all I gotta say.
Yeah, for sure. But why don't we go into the Lightning Network report from Bitmex? And I was taking a look at that recently because a lot of people have been talking about Lightning and asking me about it, and I'm still in the process of trying to figure out which node works best for my needs. On one hand, you can go with the Casa node, which offers multi-sig, and it's very easy to get onto Lightning, and it's got a relatively good price point, $300, and it's easy to use, and it's more for personal use. And then you have something like the Nodl, which is more expensive, $500, more towards like a small business. You can run BTC Pay Server, connect it to the Zap wallet, and do a lot of other really cool features. But there's no one node that kind of does it all. And Bitmex put out a great report with the conclusion that a well-managed node with properly balanced channels can earn you 1% annually on your BTC. And what does that mean in terms of like a new risk-free rate for Bitcoin? I think it has a lot of opportunities because now you can be a node operator and earn 1% if you take the time to figure out how to properly manage your node and make sure the liquidity is working in the best interest of the network, and you're offering reasonable fees. You can earn 1% annually, and that's a lot of Bitcoin in the grand scheme of things. And I was doing some quick math here, so a little pie in the sky. If you have 1 Bitcoin on a Lightning node and you earn 1% annually, that's 0.01 BTC, and let's assume $100,000 per Bitcoin price. That's $1,000 worth of Bitcoin, which is not too bad. But 0.01 BTC, I mean, it ends up being a lot. Like, that's a lot of Satoshis annually that you're earning, and you're just providing a service to the network, nothing more. You're just helping route fees along. Very low barrier to entry, right? Anybody can do it as long as you have the capability and hardware to run a node. It's definitely a much lower barrier to entry than mining, and you can learn the skill to do it. And I think that's going to be a big topic over 2019 and 2020, like the best way to manage your nodes and how much can you earn. I bet we're going to see a lot more reports on that into the future.
Yeah, it's definitely interesting. You know more than I do about Lightning, but as you were saying earlier, this is a lot more. This is a very passive thing. Correct me if I'm wrong with that, but I feel like this is a very passive thing where minimal work is required to, have a node up and running, and then letting it, maintaining it basically.
So I would have assumed that was correct, but apparently running your own node is not easy because a lot of the functionality required to have well-balanced channels is a lot of manual effort and work of rebalancing the channels. So there's not a kind of algorithm or anything that balances them for you or does like auto balancing. So it's definitely something that you need to be proficient at, and I hear it's not that easy. So that's why I think that the fees should be referred to as fees. I understand you can try to calculate, an annualized return on it, but it's really a fee that you're earning because you are providing a well-functioning node, and you're providing liquidity to the network, and you're charging a reasonable fee for it. And you can be undercut by anybody who's willing to offer the same service. And it's just a commodity, right? Just offering the liquidity. Anybody can do it. Very low barrier to entry. And it's very beneficial to the network. And from the Bitmex report, what had they said? They said, Lightning may therefore offer a superior fee architecture as suppliers are providing a specialized service, and it is more suitable that suppliers compete with each other over fee rates. And that makes perfect sense. So if I'm running a node and I'm charging 0.1% to route a fee, and you want to come in and charge less than me, you can, and people will choose to use you to route, and that's the end of the story. And then competition comes in, and where liquidity dries up, someone's more well connected, they can charge a higher fee. I like the free market aspect of it. And I guess we could talk a little bit about the difference between the on-chain transaction fees and the off-chain transaction fees on Lightning. So right now, and this is coming from the report, for on-chain Bitcoin transactions, users or their wallets specify the fee for each transaction when making the payment, and then the miners attempt to produce blocks by selecting higher fee transactions per unit block weight in order to maximize fee revenue. So when you're sending an on-chain transaction, if you've ever used your hardware wallet, you can go and use the little slider and select how much of a fee you want to pay. And, it could take a couple hours if you want to pay 1 Satoshi per byte, or you can get it done in 40 minutes and send a higher fee. And then in contrast, the Lightning network works the other way around. So a routing node operators set the fees, and then the users select a path for their payment and selecting channels in order to minimize fees. So it's kind of backwards. And that's good because then you have like that competitive market of node operators competing for your business of offering liquidity and routing your payments. And there's two types of Lightning fees. So there's the base fee, which is the fee charged each time a payment is routed through a channel, and then there's the fee rate, and that's the percentage fee charged on the value of the payment. So in an on-chain transaction, you could send $1 billion worth of Bitcoin for, 5 cents, and it's not gonna. You could send $5 worth of Bitcoin for 5 cents, but for Lightning, the larger the size of the transaction, the higher the fee you're going to pay, because it's on a percentage basis. It's not just like a fixed fee. So it's you have those two types of fees on there, which is interesting, and I like seeing how the economic side of Lightning is working out. I don't know if I had any expectations of it not working, or the economics or incentives of it not being aligned properly, but it looks like it could end up being a really healthy market.
Yeah, it's definitely interesting when you speak about the fee rate there, percentage wise, because now you think about Lightning Network, I guess you could say is more designed to be for smaller micro payments basically, because you wouldn't want to be, even if you had a 1% fee, or I guess a little more than that even. Do you know what the exact fee is? Is it more than 1%? Or is it just one?
So like if you were using Lightning, I'll put it to you this way: I've sent someone 2 cents on Lightning, and the fee was like a fraction of a Satoshi, so like nothing. But because you're routing that payment could have been routing through many channels, like it's taking slivers of that fee over time. So on an annualized basis, the node operator is earning 1%, but for the user, they're not paying like 1% per like a Lightning payment. It's closer to like 0.1%.
Mm-hmm.
So
okay,
like
that's
so the fees are near zero to the user. The fees are
minimal.
Like nothing. You wouldn't even question it. But to the nodes, they can be very lucrative if you know what you're doing, and I think that's magical, because you start to get kind of you want to increase that liquidity on the second layer and get more BTC on it, and the velocity of payments moving around could get pretty cool. I'm excited to see more node solutions pop up with this, and I really need to get a node soon so I can start testing this out, because I think it's a lot of fun and could potentially be a good way to stack a few sats and save them for somebody or something.
Yeah, that's not a bad idea. Like we were discussing before, like I wouldn't mind trying to get a node eventually, just to test it out, and why not? It's, as you said, it's a skill, and who knows what you can be.
Yeah, I mean, here's the thing: we should all be, and I am admitting, I don't have a full node up and running. That's a sin for Bitcoiners not to do that. We should all be doing that to help keep the network as decentralized as possible, and because you want to be the person that's verifying your transactions. It's really important that you're doing that. And really easy to use, fun hardware is coming in 2019, and it's already here with things like the Casa node, and soon it's going to be really easy to pair your phone right to it and go out and spend with Lightning, and connect your mobile wallet to your own node, so that you're really not relying on any third parties, and your node's going to be running over Tor. It's going to be super private on top of already being private using Lightning. I think the user experience is just going to get astronomically better over the next 12 and 24 months. And I think there's a lot to be done on Lightning. So if you're listening to this right now, you should be thinking about how you can build a business on top of Lightning and take advantage of its features and capabilities.
Yeah, I agree with you there, and maybe someone will take that advice from you and come back and thank you later.
Yeah, I'm thinking about another. I've been thinking about another type of podcast I'd want to do with like a Bitcoin focus, and talking like strictly about Bitcoin businesses and how different they would be, and what opportunities there are, and it looks like gaming is shaping out to be a big one.
The gaming's gonna be
Uh,
internet
yeah,
money.
I mean, gaming's gonna be huge. I can't believe I dismissed it and didn't think it would be a big deal, but you can do so many other things. Like I was listening to a podcast and they were talking about the lightning chess. So pretty much you can now have a chess game and wager satoshis, and you can even like make wagers per move. You can buy extra time. You could pay your opponent to like redo a move. Other people can speculate on your game. It just things get really interesting with Lightning because you don't. There's no the fee per transaction is like nothing, so you can start to do things that weren't possible before on the legacy financial system. And I think that's where it starts to get interesting because we haven't done enough time thinking about what use cases are possible now that weren't possible otherwise. So we just got to let Lightning mature and the whole network mature. There's going to be things that are so obvious in hindsight that we cannot even think of right now. Like, oh, obviously we would have done that for Lightning or Bitcoin, and why didn't we think of it sooner? So you just have to let these things play out. But the gambling will be huge. Gaming will be huge. I don't know. What do you think?
Yeah, and like especially when you think about games now, like a lot of them do free to play, like Apex, Fortnite. Um, I don't think PUBG's free to play, but like the Apex and the Fortnites of the world, which are basically like the king of the hill type things, where you don't, they run out micropayments. People buying skins, people buying like that's it. People aren't paying for the game; they're just paying for skins and stuff like that. Now, just imagine that people are using Bitcoin on a Lightning network, where they could pay like a tenth of a Bitcoin for certain skins or whatever. That'd be a lot though when you think about it. It'd probably be a lot less, like paying
A tenth of a Satoshi.
yeah, no, paying like 100 sats for a skin or something.
Yeah, right. Of course. No, I think that's big, dude. I think it's huge. I can't wait to see it. I think I really like the free to play, monetize if you want model. Like the selling the skins is brilliant. It's a digital product. The overhead is zero. Right? I mean,
it's basically zero.
The best product you can sell is the digital one that doesn't cost you anything to store, manage, maintain. Like it's brilliant to sell a digital product and something that subjectively has value. So if you didn't want to spend your money on skins, if you just wanted to play, you could. But people are spending money on the skins. They like it.
Yeah, I don't know what's with that.
No, I'm so for me, like I personally don't give a shit. I don't know that I would. I don't play Fortnite, and I don't know that I would buy skins. But maybe if I did, and I was really into it, yeah, man. If I can not spend $60 on the game, but I can spend whatever I want at whatever time to buy skins and stuff like that. I mean, yeah, offer that market. That's huge. It's it'll be interesting to see when they kind of start to compete with a different money, because right now, what is it, V-Bucks?
Yes, I believe.
Like it's their own currency, pretty much, right?
On Fortnite.
Yeah.
I don't know, to be honest. I've played like 4 times, and I know I'm like of that age where everyone plays, but like I probably played more than 3-4 rounds. But you're probably right with that. But like then again, you're paying with a credit card, debit card through like the PlayStation Network or Xbox, or on PC it'd be different. Like, but so that's how you're paying with it, and then it's buying your V-Bucks or whatever you're buying, basically.
Yeah, I really don't know anything about it, but I'm excited to see gaming and Bitcoin start to get integrated. I think that's a really natural progression of how this would go, and that makes sense because I guess I started using the internet more as a kid, like through gaming, not just and I was getting on the internet when AOL was around. So things have really fucking changed since then. So to all the people out there who think times will never change, put on your fucking seatbelt because the world will be very different 10 years from now, for sure.
I agree. It's changing fast, and like we just have zero direction where it goes from here. Like I think we've talked about this before. 2020 elections are just going to be another level of retarded. I don't know if that's the correct word to use, but I don't think there's any coming down from the escalation of the 2016 election. And you can think about how influential social media is nowadays. It's gonna be nuts. There's just no other way to put it.
Yeah, I'm gonna do my best to try to stay solely on Bitcoin Twitter during that time period.
There's no escape.
I'm just gonna try
there's
to
no
avoid
escape.
it. I'm gonna do my best.
There is no
I'm not gonna
escape.
I'm not gonna watch any TV. I'm not gonna let any of that get to me. And I'll be worried about, I don't know, I'll be worried about going to the moon.
Yeah.
I'll be packing my bags for the moon. Hopefully, I won't be too worried about it. Oh my god. What do you think, man? That was a pretty good episode. We got talked about the unicorn bubble. I mean, all this is just a bunch of different pieces of the puzzle
that tie
in together, right? I mean, you have just a lot going on in the world, and all of it makes me more bullish on Bitcoin for some strange reason. But I mean, maybe I'm a little biased. But
a little. Emphasize a little.
I'll emphasize that. But with that being said, thank you for listening. Please like and subscribe to this podcast on Apple Podcasts, Spotify, YouTube. We really appreciate it. Give us a review, even if it sucks. You can make fun of us in the review. It's it'll be fun. We'll just turn it into a meme later, so it's not that big of a deal.
If you want to write a shitty review, please do. I'll share it.
All right, guys. Thanks for tuning in.
Thank you.